Alex, thank you very much for joining us today. It's always great to have you.
Of course. Thanks for having me.
So, Alex, why don't we start with you saying who you are and who you work for?
So I work for a firm called Eurasia Group, and we work with some of the world's biggest companies and investors, basically on helping them understand geopolitical risk. Where is it coming from? What are the big issues? And more importantly, what to do about it. So how to build resilience in an organization against geopolitical risks. And obviously, we're living in pretty volatile times. So, it's about building that resilience and readiness for the current landscape.
And what do you at Eurasia see as some of the biggest risks right now?
So there's a lot, right? I mean,
Yeah.
it's certainly a volatile time, but just to prioritize a couple, I think what's still front and center on everybody's mind is the war in Ukraine and how that plays out. Our basic view on this is that it's still going to last for a while, right? Plan for an extended conflict. I don't see very high probability of a negotiated settlement anytime soon. So we'll still have active military fighting, including continued Russian targeting of civilian infrastructure in Ukraine. So I think a lot of risks to the global economy still come out of that. We've had energy price shocks, food price shocks, concerns about tail risk events, and I think all of that persists going forward. Another big one is what's going on in China domestically. Growth there in 2022 was the lowest it's been in decades. A lot of that is because of the zero COVID policy, which has really turned into a trap for them. On the one hand, they care about growth. On the other hand, there's a lot of risks about opening the economy because death rates will soar. They've had COVID is still a big challenge there. Vaccination rates are still relatively low, and the quality of vaccines and their efficacy isn't quite what it is in other parts of the world. So that remains a challenge. Related to that, U.S.-China relations are still problematic and very relevant, I think, to financial markets. Much of that is revolved around technology. The U.S. as part of its strategic competition approach to China, which is a shift from the strategic engagement 5, 6, 7 years ago, has included a lot of measures like export controls on sensitive technology, bans of sales of certain Chinese equipment. We're going to see more of that. I think that will expand into cross-border investment. So those are very top of mind for us at Eurasia Group.
So just on Ukraine, Alex, if you were to guide people into what to be looking out for in terms of we're getting closer to a diplomatic resolution or we're getting further away from it, what kind of things are you looking at?
So I think what's going on the battlefield matters a lot. Ukraine will be very reluctant to come to the negotiating table if Russia is still holding a lot of the territory that they gained after the February 22 invasion. So, publicly Zelensky has talked a lot about, we need to go back to Ukraine's borders pre-2014, which includes the Crimea. I don't think that necessarily needs to happen for negotiation to become something a bit more palatable. But from the Ukrainian position, I think there needs to be more advances on the battlefield. I do think that we may be coming to a position where Russia starts to hold the line around some of the gains, and that could create an environment for a little bit more pressure from NATO, from the West, from other key interlocutors like Turkey to come to the negotiating table. But to be clear, we're pretty skeptical of a diplomatic settlement anytime soon. I think this still continues to be an active military conflict.
Alex, you mentioned the COVID zero policy in China. What are the chances you see of a quite rigorous U-turn, or do you think it's going to be something that's much more slow?
I think it's going to be gradual. So over the last couple of months, we've seen, toward the end of 2022, we've seen some gradual moves. We've had some protests, some popular unrest around it. The government is well aware that the zero COVID policies are very unpopular, particularly among younger people, but they still really want to be comfortable that the vaccination rates, particularly among the elderly, are high enough that they have enough confidence to start to liberalize things. So I think we'll see it. It'll start with, reducing the quarantines, a little bit more openness to travel, but I think rolling lockdowns and really, targeting areas that are seeing COVID outbreaks, that's going to continue, and that means a continued drag on growth in China over the course of 2023.
And Alex, particularly as it pertains to the world of wealth management, if you're looking out into 2023, what would be one of your predictions?
Well, I think part of it involves looking back to the last year and realizing that geopolitics matters, right? We came into 2022 completely unaware that we were going to have a actual war, and a devastating war, to be clear, in Europe, that China would barely grow above 3%, that US-China tensions would get worse. So I think that was a big wake-up call that geopolitics really matters. So I think from the perspective of the asset management industry in 2023, much more awareness of these sorts of risks, and they're tied into the macroeconomic risks as well, inflation, growth concerns. So it's a challenging environment. People realize that not only the geopolitical aspects, but policy responses from central banks, from finance ministries, really matters. So I think that means kind of much more policy-driven market responses and a lot of volatility this year.
Well, Alex, it's always such a pleasure chatting with you. I want to say thank you so much.
Great. Thank you, Jamie.